I'm going to share the fundamental reject spreadsheet that I created, and these are stocks that fail the fundamentals but have passed my technical scans for possible buys, and some of them are very deceiving. And if you go in and just check the basic fundamentals, free cash flow, long-term debt balance compared to market capitalization, etc., these fail pretty bad. There's a couple penny stocks in there which I still check out on the technicals and fundamentals, and they usually always fail. And there's a couple that are so obvious that you can see it from outer space, like VSCO. Let's take a look at that. Victoria's Secret. I guess everybody's given up on getting frisky, but you can see that since its inception, IPO, it's just been a downwards trajectory while most everything else is going up, or at least going sideways. And this scan is REI above its overbought line here, and DM1 to marker 1 below its oversold line. So that would be in anticipation of DM1 going up above oversold 40, and the DMI plus is over the minus. So that's part of the scan too. And the first thing I look at is free cash flow, and you can see there is 0 free cash flow and $1 million or so in the hole. Then I go over to the balance, and I see that the long-term debt is $2.56 billion, and the market capitalization is $1.53 billion. So they owe more than what they're worth. So pass on that and don't be deceived by return on equity. So to have these come up in my scan means that there are many, many traders and investors out there thinking that we're out of the woods. And I say that we're almost out of the woods, or we could be out of the woods, but I don't know. I would lean towards almost out of the woods. And all this is just pure speculation on picking up the ones on the very bottom. There are some that are doing really good, but their fundamentals, there's one thing or so in there that I just don't like, and I'll just pass on it. Just like the first one here, analog devices, semiconductors, it's very tempting. Just something in the fundamentals I don't like. And here's ADI fundamentals, so I saw the cash flow. It's like, wow, that's really great. Then you look up here and it's in the hole. It's like, why? It's like, look at the capital expenditures, $324 million. Payouts on dividends, issuance of debt, they did okay on that. But the payment on dividends and other cash distributions was huge and exceeded the capital expenditures, so that's a fail for me, but speculators could see the value in it. I just don't. So it's not like all the other ones where they're up to 50 and 60 or 100 or more price to earnings ratio. This one's at 24, and I still consider that high, and the price to book is okay. It's trading at 2.5 times this value here for book value. So you do the math, $160, I think. And it's 182.43, and you can see it's definitely almost very close to my buy signal. REI is up there sailing away. Rate of change was almost up there. DM1 up here, and DMI plus and minus down here is the fail for me.